right. So when they have struggled so mightily, is there a chance now that it's a good time to get in any of these stocks?
Yeah, it's always the trick, isn't it? I mean, they could be value traps, as I think we've kind of concluded with retail. But there are some opportunities when the bad news is already reflected in the price of the stock. And Happy New Year, Contessa.
Happy New Year to you, Nancy. Let's talk about which stocks you like here. I mean, what about the retailers? I mentioned Macy's, Gap, and L Brands. Do any of those appeal to you for 2020?
No, it's just too risky. I mean, a lot of us, we buy what we like. I shop at Nordstrom. I bought Nordstrom. I rode it up to 65. I rode it back down to 45 and finally got out. There's just such a headwind against these companies. Of the stocks that made the list, one of the stocks we think is interesting and should be given a good look at is Occidental Petroleum. We had sold out of that stock. It got pummeled after the Anadarko bid. They've accumulated a lot of debt, but the company's yielding 7.7, 7.8%, have been growing the dividend about 10, and the deal is now in the rear view. If you expect global growth to improve, that's one of the stocks that I would take a close look at.
Keith, I want to just pivot back to some of those retailers very quickly. You were shaking your head, as Nancy was, as Contessa read out, the potential buys from the Macy's and Gaps of this world. You could have said very similar argument to Target a year or so ago.
You could have.
And clearly has pivoted. So my question is, are there any more retailers out there like Walmart or Target that might not be quite on this list, but have struggled so far and still could kind of get themselves into that reinvention camp?
I think if you have a retailer like a Target or a Walmart that has a very diversified SKU inventory, if you will, across all products, hitting all things in the home as well as clothing, groceries, and the like, then perhaps you could do that as they've reinvented themselves more in the digital world. The problem you have with L Brands, Macy's, and Gap is they're clothing retailers. And if you walk in any one of their stores, they just slash prices all the time. They're continuing to compress their margins, and they will continue to close stores. I agree with Nancy. I think it's just too risky of a play, even though all those stocks have been beaten up substantially.
Oh, and so which out of this list, you've got a Biomed I mentioned. Yeah. Would you go in there? It's down 48%. Is this because of tariffs?
So Abiomed is one of those companies that got affected dramatically by tariffs because as the Trump administration slapped tariffs on Chinese medical device manufacturers, China did the same thing. And then all the medical device manufacturers, despite their good financial performance like Abiomed has, they all got thrown out together and the stocks went down. Abiomed has had pretty stellar top-line revenue the last 3 years, year over year, and they have a device that really is going to play into the aging of the world. It's a micro heart pump called the Impella, and they are the market leaders on that. So I think Abiomed, especially as the tariff situation gets cleaned out, I think that might be a good stock to take a look at.